Over the last 8 months, I would say the company has been transformed upside down. If 25% of the United States allow online cannabis sales, well, we're the best positioned company to take advantage of that. I don't even think a MSO can take, can stand up to what we have in terms of our online capabilities.
Hey there, Midas Letter subscribers. My guest now is Raj Grove, founder and CEO of Tide Inc., recently trading on NASDAQ under the symbol HITI. Raj, how are you doing today?
Hello, James. I'm good. How are you? Good to see you.
Thank you. It's great to see you too. I'm really blown away by what you've done with the company since we last chatted. I turn around and you guys are trading NASDAQ. You're trading over $10 a share on the TSX. What has happened in the last year to suddenly make you guys the runaway success of the Canadian cannabis industry?
Tide has been transformed upside down. I met you in February of 2019. And, from over the last 2 years, we've been executing continuously. But over the last 8 months, I would say the company has been transformed upside down. I mean, from when I saw you in 2019, we were at 4 cannabis stores and 4 accessory stores because we had that moratorium in Alberta. And
right.
Today, this morning alone, we opened our 88th cannabis retail store in Canada. We've acquired 4 companies since, which I'd love to talk to you about. And we became the first cannabis retailer, publicly traded cannabis retailer, to not just apply to list on the NASDAQ, but to be approved and starting to trade on the NASDAQ. So, extremely proud of our accomplishments over the last couple of years. But I always say we have the best team in the business of cannabis, and it's now clearly showing in our execution.
You bet. So you've increased revenues in the past 6 months from 70 million to 108 million. What is driving that increase primarily? Is it the number of stores, or is it higher revenue per user at your store base?
Well, it's definitely got a lot to do with the sheer number of store increase, right? Just from March 2021 to this morning, we've opened 16 stores. In March alone, we opened 8 stores. I think that is a record for any cannabis operator in North America. I could be wrong, but I'd like to think so. I know it is in Canada. So the sheer number of stores is definitely helping. And a lot of our stores have also matured, James. So, the last 2 years, the ramp up period has gone up from 3 to 6 to 9 months, but we now have a lot of mature stores that we've been opening since 2018. So that is definitely helping. But at the same time, the acquisition of GrassCity.com that we made in December of 2018, when we purchased it, that business was doing 5.5 million Canadian dollars annually. Today, it's doing north of $15 million. So we've tripled that business. Our specialty or our expertise is being operationally focused. And I think that is really starting to pay dividends now.
Yeah, for sure. When you say operationally focused, though, correct me if I'm wrong, you focus on not operating any growing facilities or any propagation facilities. You're strictly a retailer. Is that correct?
Look, we're so strictly a retailer that we had to put up a slide in our investor presentation that retailers are not LPs. Unfortunately, we've all been judged in that same bucket, as you know. But slowly, all the retailers in Canada are doing much better. It's a little unfortunate for the licensed producers simply because of how the regs have turned out. But our business is completely the opposite of a growing business. Our CapEx, our spend on a retail store is minuscule when compared to putting, $100 to $200 million to set up a growing facility and more. In many cases, as we've seen, we are direct to consumer, consumer facing. We are the end distribution hub that even the growers need. So from that perspective, I think we're pretty shielded. Like the wholesale price of flower has continued to come down, but that has not significantly affected the retailers. We're still able to apply our gross margin, although which is getting competitive, mind you, in Canada. We're still much more shielded than the growers because one bad crop or extensive capex, we don't have to deal with any of that.
Sure. Yeah, I would say that from where I sit, your focus on retailing and not having anything to do with the growing extraction concentration of the crop is probably like the secret sauce, if I was to guess from where I'm watching. So I congratulate you 100% on that. I was not a believer when I first met you. I was like, well, how are you going to make money in the retail? I would think growing it's where it's at. Well, as we know, most of the top 5 Canadian cannabis companies in Canada have a projected EBITDA of 0 for this year. So, I mean, that's just brilliant. And now you're expanding into the United States. Is that the plan?
That is the plan. You talked about EBITDA a little bit. We became the first Canadian publicly traded retailer to declare positive adjusted EBITDA in Q2 of 2020. We backed that up with another quarter of positive EBITDA in our last quarter, which was Q1 of 2021. We reported 4.6 million of adjusted EBITDA. So Q2 of 2020 was around $1 million or so, and now we're at $4.6 million. So you can see that trajectory of adjusted EBITDA. And going back to the American question, U.S. expansion is the most exciting element for High Tide. Canada is a small market. It was home turf. We did very, very good. We became the market leaders here. But I've always wanted to do business in the U.S., and I can proudly tell you that, we're now doing about 40% of our revenue run rate. We've increased our U.S. run rate by 40%, and we're now doing about $40 million annually from U.S. alone, which is all accessories and hemp-derived CBD, nothing to do with touching the plant, which we're ready to execute on when the time comes. But our U.S. business continues to grow very steadily.
Sure. So what percentage of your revenue is driven by non-cannabis products? Like, I'm talking not the weed, not the oils, not the extracts. You sell a great percentage of it, if I'm not mistaken, is actually the accessories. Is that correct?
Absolutely. So as per our last reported quarter, which would be Q1 of 2021, 68% of all of our sales were cannabis sales in Canada from our retail stores. 32% of all of our sales there is basically accessories, which is e-commerce and our distribution of accessories. Now, that's not including SmokeCartel's full quarter. We acquired another beautiful company, SmokeCartel, which is an online e-commerce platform with proprietary dropshipping technology. And we followed that up with the acquisition of FabCBD.com. And both those numbers are not part of our forward-looking quarters.
Mm-hmm. Wow, Raj, that's fantastic. So what is the biggest sort of market that you're looking at in the U.S. to dominate? Are you looking at the U.S. as a national market? Because you're not touching the plant, you're not limited to the interstate limitations of plant producers. So is that kind of your approach to the U.S.? Is that it's one big national market for you?
Oh, yes, absolutely. Like, we do business in all 50 states today through our accessories. And now with the acquisition of FabCBD, again, all 50 states in the US. So it is a national play for us. We're very proud of the fact that we have e-commerce platforms where we have customers that are shopping for these consumption accessories. This is the same customer that spends top dollar on cannabis because they consume more cannabis in general. So having this customer base already, between Grass City and SmokeCartel, we saw 33 million site visits in 2020 alone. When the time comes, we're perfectly positioned to turn on the tap on online cannabis sales. 4 provinces in Canada allow that, which practically half of the country in Canada allows it. If 25% of the United States allow online cannabis sales, well, we're the best positioned company to take advantage of that. I don't even think a MSO can stand up to what we have in terms of our online capabilities.
Sure. So what's the most popular cannabis product in Canada that you're aware of right now? Like, I'm always curious to know from professionals in the industry like yourself, what is the most in-demand product in Canada?
Look, flower remains to be the top of the category. Between dry flower and pre-rolls, the category is still at 60%. So there's no question that Canadians are still going for dry flower the most. Categories that have been picking up is the vape category. It started around 11%. It's now at like 17%. We expect it to go over 20%, so it's quickly rising. But I think for the near future, flower will continue to dominate as a top category in Canada.
And among the producers, is there one that stands out that has risen above the rest in terms of customers seeking them out?
Look, I don't want to call a single producer in particular because, the reality is there's many good licensed producers in Canada. They've been doing a great job at producing some really high quality cannabis now that we can now say it does compete with the illicit market, both on quality and price. And we see sort of the cycles, Afria would come up with some very good SKUs, and then Canopy would follow up with that, and then Aurora would do the same. So it sort of goes back and forth, and there's a ton of other producers that are doing craft cannabis that I'm very pleased to see the quality. So can't really point out to one producer because that market share goes up and down, as you would know. But overall, in general, I've been very impressed with the quality of cannabis that is coming out of the license stream.
That's great, Raj. All right, we're going to leave it there, Raj. That's a great update. Congratulations on all your success. We're going to follow the story more often now that we're back up and running in pandemic land here. And I'll look forward to talking to you again very soon. Thanks for your time today.
Thank you so much, James. Thank you for having me. Appreciate it.
You bet. Bye for now.